What's going on, everyone? Welcome back to my YouTube channel. It's been a while. I've missed you guys and I've prepared something great for you guys. Alright, let's get started. So when you come on the chart on the daily time frame or the 4H time frame, which is a higher time frame on the left here. So I'm going to put this line here. So this is the higher time frame and this is a lower time frame. Okay. So when you come on the chart on the higher time frame, you see a structure like this. You see a downtrend, lower highs, lower highs, lower highs. And at a point in time, we have a market shift and a break of structure. Then we have a demand here. Of course, we are meant to be buyers from this demand, trying to take out these buy side liquidities in the market. So as traders, we wait on this pullback. And this red rectangle you see here is a pullback. So what we do is we wait for this pullback into this demand so we can be buyers to take out this buy side liquidity. So this is what you want to look. This is what it sees on the daily time frame. On the daily time frame, on the 4H, this is what it looks like. Okay, you want to see a market shift, you want to see a break of structure, you want to see this bullish sentiment, right? On the higher time frame. Now, having done this on the higher time frame, you clear with the direction of the market. You are now bullish. You know within your heart that you're bullish in this market. What you want to do when you go on the lower time frame is look for bullish structures that support this higher time frame bias. So what you do next is when you come on the lower time frame, now this is what it looks like. We have a break of structure, just like we have here. We have a demand here, the order block. We have it right here, okay, and we have this pullback into this higher time frame demand or order block. That's what we have here, okay. This is the pullback. Now guys, when this market is making this pullback, it's going to make the same pattern here, lower highs, lower lows, a downtrend. So we're going to have a downtrend sequence down to this what? To this order block or the demand here. Now, typical SMC traders, the typical SMC does this. When price comes to this demand, we wait for a choke, and as soon as we get a choke, we come back to the demand that caused the choke and we want to buy. This is what the typical SMC, this is how they trade, or this is how we trade the typical SMC. We want to buy here. Now, guys, majority of the times, if you trade this way, majority of the times you will lose money. Majority of the times. This works, but it works few times. Most of the times you get stopped out like this. Most times you get stopped out, but few times this would work. So this is what the typical SMC, this is the pattern for a typical SMC. And this is because everyone sees the same thing. I mean, everyone, the moment price comes into the demand, we want to go look for a choke, which is the ideal thing to do. Of course, we want to look for a shift, okay, in direction. You have a shift right there, and this is a demand right here that caused this shift. Then the question here is trying to get involved in this trade because you feel it's a discounted price, because most of the time this is what we tell ourselves as SMC traders. Perhaps I'll make another video on the discount and premium. So because we feel this is on the discounted price, we want to be buyers on this demand. Now it's not always going to be the case. I mean, if Forex was this easy, everyone will be killing it. Everyone will be making it, right? So it's not always going to be this way. Most times this will not work, but few times this will work, few times. So what do we do in place of this? When price comes into this demand on the higher time frame, mind you, we're trying to buy from somewhere here and get it to this point. So when price come into this demand and we get a market shift, first thing we want to do is allow the market to confirm if it's actually going to buy. How do we do that? By waiting on price to come to this demand that caused this market shift, and we now begin to observe the price if this demand is going to hold, because at this point we have no idea if this demand is going to hold. It could be price just took out this liquidity to come to the supply and sell. This is a possibility in the market. Okay, so what's giving us this confidence that we should be buyers? So the higher time frame it's buying, but on the lower time frame we are still sellers on this corner. So what's giving you this confirmation, this confidence? Now, when price comes here and behaves like this, you want to observe price from this demand. Okay, you want to see something like this, a break of structure. Now, this break of structure here tells us that this demand is strong enough to continue price to the upside. As to say, we have a demand here, we have price comes into this demand, give us a market shift, give us a new demand, use that now, came back for mitigation of the demand, broke a structure to the upside. Now, all of these are just signs of bullish power. We have more bullish strength coming up in this game. Now, guys, the moment we have a break of the structure, this is when you want to start looking for buying opportunities. The next thing you want to do is, depending on how price breaks the structure, you want to be very vigilant if it's going to be a breaker block or an order block. A lot of times we get caught up in something like this. As SMC guys, we always want to take our entry from somewhere here. Perhaps there will be a demand here, an order block. However, if this is a breaker block kind of trade, if you're my student in the mentorship community, you would understand what I'm saying. For a breaker block, we have three criteria that we have to see for a valid breaker block. And majority of the times, market will outline, give us this criteria, and it's going to be a breaker block. However, we wouldn't see this breaker block. Our visuals are just so locked up on the demand right here that we begin to wait for price to come here, whereas price is going to use the breaker block and just go. So most of the times we begin to do something like this and say, okay, price has done this, perhaps price will come back, this will become liquidity, and price will come here. And now guys, if the price uses the breaker block to give us the big move which we are expecting to take out this liquidity, the moment price comes back to this demand which you're expecting, trust me, you get a little reaction and price would feel it. This is why most of the times when you get into a trade with SMC, you just get a little reaction and get stopped out. And that's because the big move you're expecting to take out a particular liquidity has already occurred. Now you're getting involved in a late time when the trend is changing. That's why you get a little reaction and price fails. You understand? So guys, you want to be very vigilant. The moment you break this structure, observe. If it's a breaker block, then we are working with this. If there is no breaker block, then we can come to the what? To the demand and wait for price. Right? So now this we can get our entry here or here. If this on the 15 minutes time frame or 30 minutes time frame, sometimes you can also go on the 1 minute or 5 minutes time frame on the breaker block and wait for a new price action before you can be buyers again. Okay, or better still, if this is not a breaker block entry, a demand entry, all you have to do is wait for price come to your demand and become be buyers again. Now you stand more chances with this pattern than actually trying to buy from this first demand, which you and I have no idea if it's going to hold or not. So the next thing, what if you miss these opportunities, or what if the scenario on that market did not give you a good sequence? Perhaps there was a demand here and there was no breaker block, but price just did something like this and kind of did something like this, and the next thing you can see we have something like this. So in this case right here, this is a different sequence. We have a break of structure. As a matter of fact, this gives us more confidence to our trade because the more we break structure, okay, this gives us more confidence that yes, we are actually strongly bullish. We should be buying this market. The more we break structure to the upside and take out liquidity, take out liquidities, we want to what look for buyers, buying opportunity higher. Okay, the moment we see something like this, we are taking out liquidity, all right, and we have this on we have this these demands are here. However, price decided to be breaking structure. This shows that the trend is quite strong. What you want to do is begin to look for the demands to ride with this trend. Okay, to ride with this trend, you can go on the 1 minute time frame or the 5 minutes time frame and repeat the same thing because the market is still going to come back in the lower highs, lower lows in a downtrend pattern. And when it comes here on the lower time frame, you can still find good entries to take. You understand? However, now this typical SMC trading pattern which we do as chalk will work here, but wouldn't here it has a 90% win rate, but here doesn't. The reason why you can apply a simple chalk and demand entry and it works here because we have built a bullish bias. I mean, strongly it has been confirmed. Right here, this is the first time prices come to this demand. We haven't confirmed nothing. But right here, this multiple breaks and breaks all shows this bullish sentiment. So you want to be buying, you want to be buying, you want to be a buyer. You understand? Here it's going to work. Right here, you stand the lower chances. You see the difference? Okay. So you want to be a buyer somewhere here and ride this trend to the upside. Now you see how this market looks like. On a daily time frame, we have a market shift from a downtrend, gotten a break of structure, and we allow the price to pull back into a demand. And on that demand, we look for an entry. We don't want to buy, and it's not a compulsory thing to be a buyer at this very point here. Okay, you mustn't be a buyer here. You see, you mustn't be a buyer at this point. This is where most of us fail on this SMC trading because we want to get a sniper entry, we want to trade, we want to get an early entry. Early entry always mess up our account a lot. So you want to be patient, don't be in a haste. Allow this to form, to build up. It's either you buy somewhere after this break of structure, whatever you see, now be vigilant on whatever you see here happening here. If it's a breaker block, you want to work with a breaker block. If it's not a breaker block and a demand, you want to work with demand. However, if a different information print itself like this, you still want to be vigilant to take note of the market. Okay, don't just key, don't be flexible, don't be rigid. As a trader, you have to be flexible. You have to understand what the market is saying and work with it. Okay, so that you don't get you don't stay behind and the market just keeps going, right? So I'm going to show you an example of a trade, break down this trade on USD JPY. We had this trade last week. Now on this trade right here, you can see my screen. So on the left, this is on the left corner, we see we are bullish, right? We are bullish. You can see what I've done here. We took our liquidity here. We had a break of structure, break of structure. All of these are liquidity resting underneath the structure. So I mapped out my order block, and you can see I was not looking towards buying from here. I can't do something like this. Come on, I cannot just come here and buy here. I can't do something like this, right? If I must do something like this, then I will have to work with this demand and refine this demand. If I must place a buy limit, then I'm going to have to refine this demand. But when a trade gets into a new week, we want to make a new plan for the trade. Now, as soon as price came into this demand, you can see what happened. Price did what? Price created this slope and took out this liquidity. Now, after taking out this liquidity, we have a chalk. Let's go on the 15 minutes time frame so you can see what it looks like. So on the 15 minutes time frame, you can see right here we have a chalk here. We can take this to be our market shift. Either of this, any of the structures here we take to be our market shift, and that is fine. But you can see that we have our market shift right here. Now, this is our last break of structure or a sweep. This is our market shift. and this is the demand right here. So on my screen, I had this demand waiting, but you see, I wasn't planning to buy from this demand. So I wanted the price to come to this demand and confirm. Okay, I did not want to go aggressive. I wanted to confirm, and when price come here, you could see price came onto this demand and gave us. This was the last break of structure, of course, last break of structure to the downside, and over here we had our market shift again as a new market shift or a chalk. Now, and let's take this here, we have a new demand. Let's say we have a new demand somewhere here now, right now, because this is not a breaker block. This is not a breaker block. Okay, now let's say we're waiting for this demand right here as a SMC trader. Now, in this case, you can see what price is. Price left without coming back here and gave us a new break of structure. You can see this. Let's go to here and see much better. So you can see this. So you can see price came here on this Asian session, give us a new low, which a lot of times we'll call this as liquidity cause that's liquidity, a new low, and give us a new break of structure. And in this new break of structure, I was presented with liquidity. Okay, I was presented with another liquidity right here. Liquidity right here. So you can see this. And now, because of this, my entry was now positioned here. Guys, my entry, you can see where I put my entry, right? Now, the only reason why we didn't take this trade in the group was because this was a news activation. Okay, we don't trade news activation. We are either on a trade before a news, okay, or after, not getting triggered by a news, because sometimes the news can get messy and hit your SL, the momentum, you understand? So this was a news, there was a spike into this entry, so we couldn't take this trade. However, if there was no spike, we would have been on this beautiful trade that gave us a beautiful 10 hour. You understand? Following the breakdown I just showed you, the order flow, the break of structure, we don't just come, we don't rush the trade because we have a break of structure, a sweep, a demand. It doesn't mean when price comes here, we just rush in and get involved. No, we have to patiently wait, give the market enough time, to mature before we can get involved. All right. So you see how long it took us to wait to get this good trade right here, and it ran for a very good 10 pips, 10 hour. And you can see why we had more breaks of stock and more breaks as it keeps going. So guys, when price comes to your demand, and you go on the higher time frame, you see the structure, the daily bias is bullish. You want to go on the lower time frame, map out your demand, and patiently wait for price to come there, give you a beautiful order flow for you to get involved. Okay, so I hope this helps. I'll make more videos explaining different types of entries because you have to be flexible. There are going to be different formulas in the market that present itself. So as a trader, you have to be flexible and be able to interpret any of these situations that you're faced with. It could be a breaker block, it could be a demand, it could be anything. It could be this one I just showed you right now. There are different formulas, there are different parts. You have to be flexible, open, and be very vigilant so you can work with the informations you're being presented with. Okay, so I hope this video helps. I'll see you guys in my next video.